Aloha, everyone. Joshua Hayes of Big Wave Trading. It was a pretty good quote consolidation day overall for the stock market, even though it was an up day following the gap up. We pretty much stayed range bound overall. In the end, pretty good session, but there's a few issues that I'm already seeing as we bounce. So I'm not gonna, be I don't want to be trite about this, but I don't think that this rally is going to hold if it continues to move the way it's doing. This actual chart of the New York Stock Exchange pretty much tells the tale that I want to discuss. Today was really good. Don't get me wrong. In my personal holdings, do not forget, I am long and or tracking on an end-of-day basis for members that are still long for the website, 200 names. Guess how many 50% and 100% end of day sell signals I received today, folks? Zero. Not one end of day 50% or 100% sell signal out of the 200 stocks and ETFs that I'm still tracking and or long. So that's incredibly impressive. However, my scans that have been holding up well, actually, overall as we've downtrended, oddly enough, are starting to look a little worse as we bounce. Why? What you actually can see here in this chart. You can see the NYSE volume. Each day of this bounce has been lower. At the same time, you can see this BOP falling. This isn't just happening in the NYSE. I'm seeing this kind of price action with volume and BOP in everything. Stocks I'm long, stocks in my perfect speculator scan, stocks in my green BOP for the past 20 days scan, and a strong reversal off the lows. Not only do I already have stocks with basically not I'll have stocks that look like RKDA, holding on to their max green, or an ad signal that we have this evening, BY. But unfortunately, if you just look at the ad signal this evening really quick, going over them in Q and ST, you'll notice BOP's going the wrong way. SPAR, BOP is going the wrong way. New long position, KELYA, BOP is going the wrong way. PRFT, even though I'm not taking this long signal, I flagged it, but you can see even though BOP's rising from the session before, the trend overall is pretty clear. So there's a lot of this. QBAC is a new long. See BOP going in a certain direction. There's a lot of that out there, and it's starting to become a little bit noticeable to me already. So with right now, actually, as I'm making this video, futures are selling off. Go read the news, everyone. It's entertaining every single day. It's got to be something with this guy and his tweets and whatever's wrong with him mentally. But futures are selling off again, and actually this will be now where we can see how we want to play this market. If we sell off on heavier volume, above average volume tomorrow in the market, BOP continues to go in the wrong way in all of my long positions, and I start to see them roll over on heavy volume, then we have concerns. But if we can sell off maybe Friday, next week on lower volume in a nice flat orderly manner, start to see these BOP indicators rise on some more of these stocks in my scans, I'll feel more bullish. But oddly enough, as the market pulled back, I still had high hopes that the bounce could be strong because of how well my holdings held up and how well the names in the perfect speculator scan held up. But as we bounce here, I'm starting to get more and more concerned about what I see internally. I really thought with the way that the individual stocks held up already in the pullback, once we started to bounce, I would start to see more and more like setups, even like QBAC and KELYA, which are new long positions, but with BOP going this way and with volume surges much higher than what we have today in either one of these names. I just would have thought that we'd be seeing BOP going the other way, more stocks that look like BY or RKDA, for instance, but we're just not. So with that being said, nothing is being increased on the long side. All new long positions will continue to get 1% of my capital. Each scan that the stock goes in will start to get 0.5%. But even then, I got to be careful with the dollar loss amounts because my max pain level for a $500,000 size account that I run at Interactive Brokers with this end of day trading methodology, I refuse to even lose $200 on even one position. My normal max pain is 1,000. I've reduced it to 500 once we started to pull back in February. It's now down to 200. So like with ULH, it was 1.5% of my account capital, but I started to do the math and realized if it just breaks the lows of the signal date, I'm going to be losing $240 to $250. So I had to pull it back share size until I got to under 200. And that's how I'm operating. Safety first, not changing it up. So really quick, let's go back through those long positions. KELYA, that was in my CanSlim stock scan, CanSlim quality scan, excuse me. Not confirmed in any other scan, so it's 1%, limit order 29.75, the high of the day. First cut loss where the pocket pivot point signal day is, right there at 28.79. Final cut loss right there. Those green bop and recent support level lows, 28.26. It violates 28.26. I'll be all out of KELYA once again. It has a history of shaking out intraday, so keep that in mind if you decide to go long this stock and do what I do by having hard stops. You could get shaken out. That's what happened the first time I went long here. Got shaken out here, started to work higher again, but it's really just gone nowhere. So I'm kind of glad I got shaken out, I guess. And then QBAK. QBAK came from my perfect speculator quality scan. This is only going to probably be a 1% long position on my end. However, when I checked it on MarketSmith and at Investors Business Daily, it's a CanSlim quality stock with some pretty explosive recent earnings and sales growth. So it should technically be 1.5% signal. I don't see how I can do that since my inherent risk is right around 5% just at the first stop level. And then even to the next level is, well over 10%. So I just can't see myself going over 1% in this name, though technically it should be 1.5%. But like I said, I refuse on a $500,000 account, I refuse to lose even $200. Keep that in mind as we move forward here. My normal max pain, which is already extremely low, is 1,000. Technically, you should never lose more than 1% of your account, ever have that at risk in any one position, which means that I would give myself normally to $5,000 of losses before I cut and run on any size. So think about that. Should be risking about 5,000% per long position if I took the 10% or more position size as normal, only willing to risk $200. Keep that in mind. So QBAK, 1% of my account capital, 11.18 limit order, first stop 10.47, final stop 10.09. Then I've already shown you the ad signals. SPAR. This is basically an ad signal / buyback for me. And QNST, it's an ad signal. If you got shaken out here, I gave the losses 12.07, but it was completely splitting hairs with these lows here. So I'm very thankful that I ended up using 11.99 as my stop level for this ad signal on the 29th instead of 12.06. I held in because it only got down to 12.01 yesterday, so I didn't lose any of my ad signal there. So this is another ad signal, but this time 12.86, one and only stop this time for you guys, 12. You can then also use, just like I said, 11.99. It's splitting hairs. There's also two other support levels here and here that you can guarantee, since I'm long from back here, right here is my initial entry, that I'm still using. Then SPAR's pretty clear cut. Limit order 1670. There's your one and only cut loss level if you're a new trader, 1595. But for me, I've got a second stop level. You know where it's at. If you know how I trade, green bop, pocket pivot point signal, that's going to be my personal final stop. And then BY, This is actually the only stock that was in 3 scans: Can Slim Quality, IPO scan, and also my Max Green Bot for the past 5 days scan. 1% of my account capital in the ad signal, 23.25, not chasing the high of the day. Why? Because all of the short-term moving averages are below the real body of the candle on Thursday. So 23.25 limit order, first cut loss 22.37, final cut loss 22.13. All right, everyone, great luck on Friday. We'll see what happens. The futures are already selling off hard after hours. We'll see if that creates any more panic for the market to bounce off of, or if my BOP indicators and the low volume on this bounce attempt is telling us the true nature of what's about to happen. Don't forget, downtrending 50-day moving average, that gap up area, these recent highs, the ultimate January 2018 highs, there's a lot of resistance we got to get through before I can even remotely try to turn bullish. I mean, even using these downtrend lines here, I mean, it's not even, I mean, we're not even close, guys. There's so many resistance points. I recommend being very safe here. Aloha.